Sentiment that we're seeing on your end, and of course, setting up the day on Wall Street higher as well. Let's take a look at our U.S. futures and see how we're poised for trade right now. If the markets were to open now, the Dow would be higher by 70, the Nasdaq higher by 18.5, and the S&P 500 higher by 8.2. And it seems, Ross, that investors here are looking at some of the more positive data points for this trading session and shrugging off the fears about the continuing crisis in Greece. But of course, you know, we're going to be watching today very closely what the FOMC members had to say about quantitative easing when the minutes from the latest Fed meeting are released, and that's at 2 p.m. Eastern time today. Some market participants are convinced that the central bank will consider further stimulus, which investors believe has provided a leg of support under the U.S. market's current rally. The Fed has left the door open for more QE, and the next program, if carried out, is expected to expand the bank's balance sheet by hundreds of billions of dollars. And joining us now to talk more about that and strategy as well is Ryan Mumy, founding partner and principal of Mumy Financial Advisors. And still with us, of course, our guest host, Nick Karn. Ryan, I want to start with you and talk about the Fed. Obviously, the issue, you know, is QE3. It's still on the table. How likely do you think it is that the Fed is going to take that route?
Well, good morning. We don't think it's necessarily necessary for the Fed to boost or anything beyond what they've already done. They've continued to buy their own the United States debt to try to put some cash out into the economy, and we think that's enough. It's time for the markets to work out all the issues we've seen over the last 3 years itself.
Well, speaking of the markets, let's focus on the equity markets for a moment, because we're in a sort of bullish period right now. Since the start of the year, we've seen a lot of buying in terms of equities, but you say that the markets are due for a correction.
Yeah, and that's good for any healthy market. As I told one of my clients last week, you know, with growth in the stock market, we want a Le Mans more than, or a LeBaron more so than a Corvette. We don't want those sharp ups and downs. We want it to just slowly chug along. So a near-term correction is healthy for the market. But long-term, as I said in October when I was on, long-term the United States is in much better position than the rest of the world. And we like the United States, and we're overweight there for the time being.
Okay, and if that's the case, and in fact we are positioned better than the rest of the world, then why are we seeing weakness in the dollar?
The weakness in the dollar has a lot to do with the Fed buying its own treasuries. That's weakened the dollar. You know, the dollar was in the 120s a little over 10 years ago at the early 2000s when a lot of the fiscal stimulus, long-term fiscal stimulus started. So if we see the Fed back out, loosen up their balance sheet a little bit, we're going to see the dollar strengthen, we're going to see gold come down, and we're going to see crude oil stabilize.
Nick is with me here in London. He wants to step in. Nick.
Yes, I was wondering, Ryan, what your take was on the a fiscal adjustment in the US, because this is one of the dogs that hasn't barked so far. You know, we have a lot of talk about fiscal adjustment and so on. Now that looks to be serious actions, not this year but next year, and I was wondering what your take on that was.
Well, I would agree with you a lot that it's time for the government to, the Congress to create a sustainable, stable growth environment more so than the Fed by becoming fiscally responsible, reducing spending, and encouraging a pro-growth environment that would allow the markets to work out our issues versus relying on the government to inflate it.
Okay, Ryan, we'll come back to you. Stick around. Just got this is interesting. Bank of England Governor King said no one can fully prepare for the unforeseeable consequences of a Greek default. They're making contingency plans, but it won't go into detail. This is the Greek finance minister says. Some in the Eurozone are playing with fire, and they may even want Greece outside of the Eurozone. Now, this is directly probably towards the Germans and the Dutch, who seem to be saying we're prepared to let Greece have a disorderly default. He says they have fulfilled the overwhelming part of its bailout obligation. Say the few remaining issues will be clarified by today's Eurogroup conference call. There was supposed to be a Eurogroup meeting. It got cancelled. There is, we now understand, going to be a conference call at 4 o'clock London time, 5 CET. But there you go. You've got some politicians now in Europe saying we're strong enough to let Greece go. Mervyn King is saying we can't fully prepare for unforeseeable consequences. And the Greek finance minister suggesting some people are playing with fire. by making those suggestions. It's still as clear as mud, Jackie.
Yeah. Very, very interesting. And of course, all eyes are going to be on that call today to see how the situation shakes out. But stay tuned here on CNBC because Andrew Ross Sorkin, he's going to be interviewing former Treasury Secretary Hank Paulson on U.S. Squawk Talks. That's at 8 a.m. Eastern Time or 1300 CET. So make sure you tune in for that. And still to come on Worldwide Exchange, well, they've had a very tough time as of late. But our next guest says that now is the time to buy into U.S. listed Chinese equities. So is the risk worth it? Find out more next.